So the stock market of India is going down. Okay. Now we need to understand what is stock market, what is stock market, at the same time why is it going down, what are the reasons for it to go down, and subsequently we will understand its impact on the Indian economy. In general, what the impact can be, and specifically because it's the Indian stock market, specifically what impact is it going to have on the Indian economy. So let's get started. Let's start with an MCQ which talks about the stock exchange. Okay. So the question asks, which of these is a function of the stock exchange? A. Role of an economic barometer. What is a barometer? Barometer is used to measure. Okay, barometer is used to measure pressure. So what they are trying to mean over here is it is a measuring device for the economy. So they mean to say that the stock exchange is a measuring device for the economy. Meaning, if it is doing well, we can assume that the economy is doing well. If it is not doing well, we can assume that the economy is not doing well. So it's a measuring device for the economy. Second, valuation of securities. As in valuation of shares, it helps in deriving the value of the shares, deriving the value of the company, the securities. Because when the shares are traded in the market, their rates keep fluctuating depending upon the increase, decrease in demand and the future prospects, so on and so forth. So that also helps in valuation of securities. So are these two correct? Yes. Option A is let's say not option A is right. Saying that option A is right would be wrong, but the statement given in option A is actually a correct statement. It is a measuring device of the economy. It also helps in valuation of securities. C is encouraging investments and savings. How does it encourage investments and savings? See, if you want to buy a share of a company, how easy it is for you to buy it now because of the presence of the stock market. Right, and now it has converted into apps which is there on the phone and you can easily buy it. You can invest, if a share is of 250 rupees, you can simply invest 250 rupees and buy that share. So very small amount also you can invest, hence encouraging investment and savings. Now this 250 rupees would have been stored with you at your home, but now it is in the market. So money multiplier effect will also come into the picture. So it is encouraging investment and savings. Or it would have been spent somewhere, expenditure. So now it is there in savings and investment. So this is also a correct statement. This is also a correct statement. This is also a correct statement. Hence, all of the above are correct. This is the right option. That is D. All of the above. Now, moving on. Let's understand what is a stock market. So what happens is, the stock market, one thing is written over here is a secondary market. That means there is a primary market also which would be doing the primary thing. This is the secondary market, so it would be doing the secondary thing. Remember that stock market is a secondary market. So what is actually it is? It is where the shares of public listed companies are traded. So whenever a company is listed on the stock exchange, their shares then can be traded on the stock market. What do we mean by shares and why is it secondary? It is secondary because here when the shares are being traded, this trade is done by not by the company and the people, but among the people. Among the people, or you should rather say among the investors. The investors buy and sell the share among themselves. For example, if now you go on to any app, or for example go to the stock market and want to buy a particular share of, let's say, an X company, right? It is trading at, let's say, 315 rupees, and you say that I would want to buy this at 315 rupees. So who is giving you this share? Is the company giving you this share? No. Then how will you get this share at 315 rupees? Because you have placed an order to buy. In the same manner, there would be someone who might have placed the order to sell. Let's say I have placed the order to sell, you have placed the order to buy. We are not a part of the company. We are just investors investing in stock market. So since you have placed the order to buy, I have placed the order to sell. So my shares would be given to you at this price, and I would be getting that money in my account. So who is trading here? It is the investors who are trading here. This is the second level of trade, hence it's a secondary market. Then when did the first level or the primary trade took place? That happens during the initial public offering, that is IPO, which is initial public offering. So the company can come up with initial public offering. Let's say the valuation of the company is 100 crores and the company says that 10 crores I am going to source from the public. So for 10 crores worth of share it comes up with. It comes up with an IPO of 10 crores. Now initially, let's say many people buy this. So you and I initially buy it from the company. So this is what? This is the company selling to public. Okay, so initial public offering is the company selling to the public. Once the company has sold to the public, that is to us. Now this 10 crore rupees is with us. Now we will be trading it, buying and selling it, buying more. How can I buy more? I can take it from you if you want to sell. How can you buy more? You can take it from me if I want to sell. So like this, there will be thousands, lakhs, millions of players, investors who will be doing this. So once this 10 crore is with the public, now if we buy and sell, we can buy and sell this particular thing on a stock market, and this would be the secondary market because initial public offering has already taken place, which was the primary trade. So I hope the doubt between the primary and the secondary trade and the primary and the secondary market is absolutely clear now. So we have understood what is a stock market. It is a market where the shares of public listed companies are traded. It is a secondary market. We have understood that concept also. And it is different from primary market. We have understood that as well, because in primary market, it is the company that is selling to the public. But in the secondary market, it is the public that is trading among themselves. Right? Now comes the question, guys, the most important question related to the things that are going on presently. What is happening presently? The stock market is coming down. So the question is, why is the stock market coming down? The experts have given 5 reasons for that. Let's look at them one by one. First is FIIs selling. What are FIIs? Foreign institutional investors. Who are foreign institutional investors? Let's say a foreigner wants to invest in India. They want to invest $1,000. Now that's a very small amount, and how would the government or CBC, who is that person, do the background check and all that? So instead of background checking millions of people, there are certain companies called as foreign institutional investors who will invest money in the Indian market on behalf of the foreigners, and they will take a cut. They will take a small amount of money, fees they will charge, and invest the foreigners' money in India. So what will happen? Let's say millions of such people want to invest in Indian market in different companies. They would aggregate the money and invest on their behalf. And the SEBI only has to regulate this FIIs and ensure that they are proper and their source of income is proper, instead of regulating millions of people. That is the concept. Now, what are the experts saying? Experts are saying, now they are saying this is the biggest reason, but later on you will see another reason is also very big as per them. So let us look what the experts are saying. They are saying that the biggest reason behind the recent volatility. What is volatility? Either it's shooting up too much or shooting down too much. So that is volatile, highly volatile, erratic, volatile. Like for example, cryptocurrency, right? For example, your Bitcoin, volatile. Suddenly it will be 45 lakhs, then come back to 27, 28 lakhs, right? A huge change. So cryptocurrencies are actually volatile. So the reason for recent volatility in Indian market, they are saying, is the strong sell-off by foreign institutional investors. So what is happening in the recent days? Foreign institutional investors have sold off 1,000 crore worth of stocks To be exact, it is 982 crores, very close to 1000 crores of stocks they have sold. So a rapid selling by the FIIs are taking place. Now, since the FIIs are selling rapidly, what will happen? The Indian investor, the Indian retail investors, even you and I with the mobile app, not just the Indian companies, but us individual consumers also would have a psychological thing of not investing right now because it may go further down. Okay, so this is not just limited to it. Stock market is a lot about the psychology, the trust in that particular system, right? When the foreign institutional investors are selling, it is having a toll on the retail Indian investor also, and hence the downfall. But there are other reasons as well. The other reason suggests the premium valuation. What is premium valuation? When the stocks keep increasing, you are seeing that the rate of the stock is increasing. So you would realize that it is continuously increasing. Let me buy it because it's doing well, and in the near future also it will do well. So what happens? A lot of people start buying it. And because a lot of people start buying it, now it will increase even more. Because more people are buying it, more demand is there, so it's increasing even more. And since now so many people have subscribed to it, now it will come down because it was oversubscribed, overbought by the people, right? So its valuation was at a premium level, way more than what it should have been, because it is not just the good performance of the company, but this craze behind that particular stocks that it has made it reach so high that now it is bound to come down. Basically, this coming down it is bound to correct. It is known as market correction. Market corrects itself. If the prices have shot too high, it will correct and get stabilized and then further increase along with the performance. So Indian market is at a premium valuation against historical average. So historical averages of increase was lower, but now it is at a premium level is what they are suggesting. The other thing is a very basic thing, unimpressive Q4 earnings. If the company itself is not doing well, guys, the stocks will not do well. And as you know, sort of a recessional scene is there throughout the world. Not throughout the world, but in a large part of the world. The job segment is down, the growth is not there. So in India also, the Q4 for the companies have been very unimpressive. And if the companies do not do well, what will happen? The stocks of that company is bound to go down. For example, if you talk about L&T, if L&T bags too many projects, the stocks will go up. But if L&T has not bagged a lot of projects, the stock's price may go down, right? That's how it works. So it is a very basic reason. Okay? Then comes lack of fresh triggers. Certain triggers also help the stock market to do well. Let's say, I'll tell you one thing with respect to polity. If there is a single party majority, the government can be formed with a single party majority, or there can be a coalition government. Now the thing is, coalition government is not that stable because it's a coalition. No single party had a majority, so it's a mix of parties. People would say, I want to be the prime minister, I want to be this, I want this ministry, and the government can fall down. Okay, it's not stable. So when the government is not stable, it can fall down anytime. So the policies will also not be that stable because the government can change and the policy can change, and the market will not have the belief in the stability of this form of government. But if there is a single party majority, this is a more stable form of a government. Even this government can fall down, but this is a way more stable form of a government. So the policies would be stable. So if the market, market can trigger upward motion due to any reason. One such reason can be this. If the market goes, boss, the elections are going and we know that one party is going to have a landslide victory and it's going to be a single party majority and the policies would be there. We know who would form the government, how their policies are. It benefits the capitalists, for example, the industries, for example. So it's a good thing. Then the sentiment of the market goes up and the stock prices can also go up. So this is one of the triggers. Like this, there can be other triggers. So presently, there is a lack of any fresh trigger to trigger the market to go upwards. That is one reason. Similar to this reason is the pre-election jitters. As I said, this single party majority would help if you are sure who's going to win and how the government is going to be formed. Will it be coalition? Will it be single party? It helps the sentiment. But right now what is happening, since elections are going on, but the results are not yet out, of course. So there is pre-election jitters. There is jitters before the results of the elections are out. You just do not know what is going to happen. Especially with the low turnout in the elections so far. This time's elections have seen a lower turnout. So when a lower turnout is there, it can mean a lot of things. One such thing could be that people probably, this is just an interpretation, need not necessarily be correct. That since there is low turnout, people who were previously voting for the government who was in power are probably not shifting their vote, but at least deciding not to vote for the same particular political party. So that is one of the interpretation. Okay, that is one of the interpretation. So because of such interpretation, the market is uncertain on the outcome of the election, right? As a result of which it is hold on, let's not keep buying, just hold on, let's wait for the election results and let's see what it is. If a coalition government is there, maybe it may fall even more, but if it's a single party majority, it comes, and if it's a landslide victory, then probably it will shoot again, because that will give the market what? It will give the market a trigger. But the market presently is uncertain and hence does not want to take a chance. Okay, so these are the reasons as to why the stock markets are down. Now what impact can it have? Now we clearly see that one of the reasons is definitely the FIIs selling off their shares and taking it abroad. So what is happening? There is a flight of money. What is flight of money? Money is flying away. Flying away from where? From India to other countries. So this is happening. Now if this continues, if the flight of money continues, what will happen? People would be taking out the money from the Indian economy. What does it mean? People are taking out money from the stock markets, Indian stock market. Now when it is the foreigner or the foreign institutional investors, for example, doing that, they may take it out and invest in their own home country or in some other country. And that would also lead to the flight of the foreign currency. On the other hand, even Indians can take their money out, right, and invest in some other instruments, or even we can invest in some other stocks of another country as well. So from India to other countries, the money would fly away, also leading to the decline in the foreign currency that is coming to India. Okay, now what is the solution here? The solution lies in the reasons only. First things first, pre-election jitters. So when the results are announced, the trigger would take place, whether it's in a positive direction or a negative direction. Sorry, if it's a coalition government, no single party majority, it can have sort of lower the sentiment. But if it's a landslide victory, it can suddenly improve the sentiments altogether. So based on this is going to be a very important day, not just the day of the results, but the day the counting starts and the results start coming out. Okay, which would of course give a trigger. Now apart from that, guys, this is very important. Earnings. If the company is doing better and better and better, so it will be a good prospect to invest in that company's share. So that is also going to play an important role, which would of course help the foreign institutional investors also to see the companies and the shares of that company as an attractive proponent to invest. Alright, so the solutions lie in the reasons only. One important day is the result day. In fact, the day the results start coming out. At the same time, we need to go back to the basics and ensure that our companies perform well. If this happens, then of course people would want to keep investing, the sentiments would be high, and the stock market would again start doing